So this is the anchored VWAP from the low. It's the last thing you want it to break. What we did today is very clear. We got to the 50 SMA and we rejected. Hey everybody, hope you had a great week. In tonight's video, we're going to do something a little different. We're going to do 10 stocks to short for the week coming up. Now, there will also be a long idea in here, and at the state of the end, because we're going to wind up doing the indexes. I just want to start very simply with, if you're not comfortable with shorting, you might just want to be staying out of the way for a while. We're going to kind of get through that in the indexes towards the end. But a lot of these ideas, when you see what's really going on and the spread of it throughout this video, and you see the spread industry by industry on what's going on, you'll understand a little bit more about why I have a little bit more caution than normal. So just to start with Tesla, you have this trend line down here. You could see how that could be tested. Why Tesla? Well, we had this as a short last week, and we talked about this head and shoulders pattern. We talked about how this was the left shoulder, how this was the head, and how this was the right shoulder. This was something on and off in the trading room we actually shorted during the week, did okay with. Everybody got a little nervous yesterday as you bounce off the 50, and we know that that's flim flam. Now, why? You have a bearish engulfing right here. And then after that bearish engulfing, you've now closed below your 50 for the first time. Whenever you close below your 50-day SMA for the first time, you usually are starting to see cracks in institutional sponsorship, okay? This is really a line that the institutions take a look at. And when it starts cracking these levels, you want to pay attention to it. Why does this work? Because the institutions are looking at it, right? It's like anything else. It only works if we think it works, right? So if you understand that and understand that that's what they're looking at, the fact that you're cracking there, you could see this come in. I do think that next week, if this gets ugly, you can see like 246.80. That would be one of the key levels to watch. I do think that, putting an anchored VWAP, again, I'm not a huge anchored VWAP person, but there are times and places where it makes sense. Looking at the lows in here and even here, in June, this one was actually May. That's actually a better one to use instead of the June low because it's a lower level. So if you just come here and take a look, that puts you at 257 from 270. So you can just kind of see how you could just keep coming down. So this is definitely the first one. Just look at this on the monthly for a second. Okay, so this is where your line is. So this is pretty much like the mother of bearish haramis if this was just perfectly placed in there. That candlestick video I will link at the end. I would really focus on your candlestick patterns right now, especially the reversal patterns. So watch that candlestick video at the end. If you don't have time, just put it on 2x. So if you see this here, just watch that level. Okay, so we're going to watch that first, and that's at 258, and that's going to be our first target and our key level. And then if we break that, we're going to be looking for this 246 caveat. Just so you're aware, I am already short this, and I will probably add to it next week very easily, especially if we just make that lower low right there. I'll probably be all over it. Now, Apple was one that I think Michael Berry's going to wish that he kind of held on to here. I think he's going to wish that he stayed short this. So to me, as I was talking about 2 weeks ago, this was too glaringly obvious. Well, maybe I'm too smart for my own good because apparently it wasn't that obvious because I didn't really take advantage or short there. We were actually long this in the 160s, did okay with it. Reversed here, and then I think we put it out here. We sold or here. I think it gapped down on us. I think we got out here. So we made like $5, $6. Not exactly what we were trying to make, but we did make money off of it. You had that bearish engulfing that Friday with the 8-minute Jackson Hole speech. And then since then, you've just been riding this down. Why is this important? This is the first time that you broke this level. Okay, the 50-day, this is the first day you've closed below it. You'll see a pattern here as we go through this video and what we're talking about today, okay? You're always looking for pattern recognition because if you can find pattern recognition and put money management around it, you can replicate what you're doing. You just have to make sure what you're doing is good. So just watch this. If you smash through that level, you can keep dropping pretty precipitously. And what I would use is your first target or key level. Again, go to these bottoms right here and just put an anchored VWAP there and just understand that, okay, you have to watch that 153 level. Now, I think you're going to break through that, and I think you're going to get to some other levels, but you just need to be aware that that level's there. And then I think you'll probably get to the W part right in here. You can see how that kind of follows through, actually. But I think you can get down here, 151. So watch these levels, watch how it acts there, so you could kind of keep the short on and judge what you're going to do from there. But I'll show you at the end why I think that this is going to kind of slice through those levels. And you can kind of see which ones are already slicing through those levels. So here's Nvidia. And this is the same kind of pattern that we've been seeing. And what we're doing now is we're replicating that pattern with new ideas, right? So this was another one in last one's top 10. And it was a short idea. And here you are, left, head, right. See the patterns replicating themselves? See how you just have a very straight line coming across, okay? So I'm not the smartest, but I am really good at identifying patterns. So you can see here how you reversed here. What do you have? A bearish engulfing. So I have a bearish engulfing and a break, okay? That's not what really we were looking for. You had to follow through the next day. It provided a really good entry. This entry was a little suspect until you had to close below the 50, in my opinion. You just didn't know what you were going to get. So once that was it, it was on. You don't need to be first. You need to be right, okay? Keep that in mind, right? You don't have to be short here. Okay, the person that shorted here and covered didn't make anywhere near the money that the person that had confirmation made here and covered, and had a much easier spot in picking a stop, right? So this is something that we were short. We did fairly well with it. You had the China news, and now you're at this new low. So if you're at that new low, you just have to ask yourself, where do you think that this can go to? Well, you have to kind of start going back to the pandemic levels and seeing if you can get back to those kinds of levels, right? Is that possible? It might be. You might keep coming in here. This is really very nasty stuff, the way that we're acting here. And it's really important to understand that you can see 115 on this. I know people think that you can't, but when you have a high growth company that missed revenues the way that it did, we all thought it shrugged it off at first, right? I mean, that was everybody's general consensus when we were talking. We all thought they shrugged it off. Wow, bad news, and we're going higher. Basically, what they were doing was just short covering in the Jackson Hole because they didn't know how it was going to go. But now we do. So this is far from over, in my opinion, as far as where this could get to. And this particular pattern is pretty nasty, closing at the low of the week. So I think you can see this 115. That would be the first key level as a target that I would look for. I'm not saying you're going to be there in a week, but the way that this is sloping and setting up, I think it's going to get worse before it gets better. And I think it's going to pick up steam. So this is OKTA. All right, now I've had some people that were playing this long in the trading room. I'm just going to explain why I would not do this. So here's what I would focus on with this name. This is a very simple pattern recognition, okay? If you look at something like this, it's almost a perfect bearish harami. Like it should be down here to be absolutely perfect, but you get what you get. So the spread of this versus this bar is about 25%, which is exactly what you're looking for, okay? What you're waiting to see here is you're waiting to see this negate, right? Some people would say, oh no, this is going to be a bullish harami. I'm going to tell you that I think it negates, but you're going to want to make sure that it negates. So your first key level to short this would be 61.43. If you pop over this level right here, if you pop over 66.60, it looks like, let's get you an exact number, 66.50, let's say you pop over that number, this whole trade's negated. My entire entry's negated if I pop over. I'd have to look for another setup. But breaking that 61.43, anything that's missing earnings like this is going to get absolutely crushed. If they're going to crush the ones that are beating and exceeding and raising guidance right now, what do you think they're going to do to the ones that don't have stellar quarters? So I understand that, yes, you had a little value buying here, or maybe some people that were short decided to cover going into the long 3-day weekend. But this is far from over. And this has a long way down. Like there's very little to stop this when you start coming all the way across and looking at it. I mean, you're really in free fall here. You really are. Like there's very little to stop you at this point. So where this winds up is really anybody's guess. But when you break like this on a monthly chart, you know, you have this little H right here, right? Kind of lifting up that bear flag. I mean, that's about as nasty as you can get. So I don't know where this finishes up. You're going to have to give it some time to settle down. But watch that 61.43, because if you break that level, you could keep going. Now, in regards to names that had good earnings that just absolutely got shellacked. AVGO, I did not think their earnings or their guidance or anything was that bad. A matter of fact, it was so good that the stock wound up gapping up and then got treated pretty poorly today and broke from that 520 all the way down. Now, this is a short now. It's a very clear short. This is a complete rejection of the 50-day and selling all day long. So, and the majority of people that own this are actually institutions, but what you're going to see is cracking that level, right? That 498.30 level, it's going to get you right to this, the top of this, right? So you're going to have a gap fill back down to that 492 level. That's another key level. If you gap fill and get under that close, your next target is this 480. Now, if you take a look at what's been happening with these other names and how they've been treated, like Snow, and that's just been absolutely crushed. And one of my best trades of the week, we did this one in the trading room, was Crowd, short, okay? 188, and then we got to 172, and now I'm forming a bear flag. So there are names that are just crushing earnings and just being treated extremely poorly. At first, during the week, they were not names that I was even considering because there were so many other good ideas that you wanted to stay away from them. But people are using these spikes in earnings to get out of risky assets. That's a big red flag for the market as a whole. And I know we're pretty beaten down here, but you're starting to see signs here that you could come in a little bit more. Look at this ADSK. Okay, so you're all the way back here. You're rallying up. You look like you're going to go. And what do since you broke? You break your 50 again. This is another classic example of you just gap and go. So you break that 197.49 level. Watch how you act at 195, because if you break there, now you're starting to look at some of these other levels. They become in play. Again, I would focus on anchored VWAP on these kinds of moves, because you would realize that you'd have to break anchored VWAP. If you break anchored VWAP here, and understand what this is, this line is the volume weighted average price of where all the participants are in from this particular point in time, right? So if all those people are up, they're probably happy. It's just like us. When you sell a stock and you're down, you're not happy. So you don't want to have that unhappy feeling, so you sell. I mean, I know it sounds silly, but when you understand what these indicators actually are, it starts making a little more sense, I would hope. So now you understand that. You just watch this level and just see if it breaks down. If it does, watch this little pivotal level right there. It ties right in with the anchored VWAP. That would be 195.31. You can use that as a key level. That breaks, you could be heading back down to this trend line, because this is really your lower trend line right here. So this has a ways to go if it breaks. And that's really what I was looking for. Stocks that are not fully beaten down yet, that are just starting to turn. And the majority of those are these really large cap tech names. But you're seeing it across the board. And that's where I think you need to be really concerned. So in other words, I'm seeing names like Boeing, and I'm just seeing complete dumping. This is just a complete utter setup and a complete break. So here you are again, and you have that wonky pattern one more time. We can call this the left shoulder. It doesn't have to be exact. We can call this the head. See how this pattern recognition and understanding pattern recognition makes your life so much easier? Because when you can kind of see them and spot them, then you can look for little pivot points and then see how they act at those pivot points and possibly give you a trigger. For example, let's say that this was to take out the low of that, which would be like 150.75. That might be a key level. That might get you back down. And then you could see how you could act at this recent low, right? You could put an anchored VWAP right here, take a look at that and go, well, I better make sure that we break that 148 level where everybody's at, another key level. And then what you want to do is and I find this fascinating because it does work sometimes, and keyword sometimes. But if you go back to like the beginning of the year and you just want to see where are the participants? Where are the participants in the stock since like 2021, right? And then you can kind of see where everybody is and go, wow, they're all, from this point on, they're all underwater. And that's not great, right? So, but you can see how they've been selling for about 2 years now, every time it got there, right? And then you kind of look at this again and say, okay, well, where are we in regards to now? Where are the people that have bought for 2022? And you can kind of see what exactly has happened here. As soon as those people were break even, they got out. So as these lines can react, and they can be what? They could be supports, right? they can also be resistance areas, right? Some people call this a pinch, right? They call it an anchored VWAP pinch. And there's a reason for that, because somebody's going to win this battle. It's my belief that the sellers are going to win this battle, and I would take a look at this. But you're seeing it throughout the industrials. Okay, this is a complete encapsulation on Caterpillar, and this is what's bothering me. There's no area that's truly safe. When you start looking at these charts today, you're starting to see pretty much every leading sector, the leading names in those sectors start breaking down. And that can mean that you could see some more pressure selling, maybe even some kind of capitulation selling coming up. Maybe that would be, great just to get it over with, but I'm not so sure on that yet. I'll show you in a couple minutes here. But see how you are encapsulating that bar, and now you're at that lower low. It gives you a perfect level right there that you should be looking at, right? So that 179 3/4, you break that, and you're probably heading back down to this 167. I know it's not this huge tech company that is going to have huge volatility. Slow and steady wins the race. Okay, so names like this, low beta shorts, meaning that they don't have a huge tie to market moves, they're very easy to short and just leave on, right? They're the easiest ones in the world, and they're usually better to trade with. Even for those of you that trade options, they just make life a little bit easier. Now, into it. So this is what I mean by any sector. And yes, they are a tech company, but they specialize in a very particular area that everybody needs. Payroll, you have, QuickBooks. Everybody uses these kinds of tools, right? So you need them, but the stock's telling you a completely different story. And what's really appealing about this is, let me just show you this level. Look how you've just been bonking at this level over and over again. Bonk, bonk, right? Tries to break, bonk, bonk, right? Can't get through. So you know where resistance is. It can't do it. So then you start turning. Now, if you just kind of focus on something right here, and you just look at this line coming across, let's put that right there. Let's make this a little cleaner. All right. And you make that a little cleaner. So yeah, once you break there, just watch how you respond to that 402, 403 level. That might be another key area for you to look at. Okay. Now, in regards to longs, it's energy. And I'm not so sure that even energy is going to hold up if the selling ensues, that they're just not going to pick up a lot of cash and just sit and wait for this to end. But this particular name looks really interesting, the CEIX. I would definitely put it on your radar. You're going to want to see it try to clear up through this level, right? So you're probably going to want to see it clear through 79.17. Maybe you could look at a smaller time frame, like a 15-minute, and try to see if you could find a particular pattern that might work with something like this to get in a little bit cheaper. But you're going to have to give this some time. It's definitely not ready for prime time. What I will say to you is I would look at what is going on out there and seeing that nothing is really coming in and nothing is safe. So this is Exelon, which is a utility company. And we're seeing that even Exelon is having a really hard time holding that 50-day. Now look at this. Now look at that break, right? You tried to rally to that break, rejection, tries to hold the 50, rejection. This is an energy company. So now we're seeing pressure in utility companies. Okay, this is a very large part of the XLU. Okay, so the XLU is utilities. It's usually a safe haven. It's not really looking like a safe haven right now. It's kind of looking like a double top. We'll get into some of the sectors in a moment. But look at this, UNH. Okay, so UNH, United Health. Everybody needs healthcare, right? Well, what are we doing here? Well, we're breaking. So you have this trend from here, right? You can see it really clean, right? There's your lower trend line, broke it, tries to get over it, bonk, can't, breaks down, bearish engulfing, and now you're at that low. So this is another setup. This wasn't in the top 10, but I'm showing you just for an example. Could you short this? Yeah, it's just a little higher priced. And if there is a flight into safety, maybe these names hold, but they're cracking. And the fact that these are cracking along with the large cap tech names, that should really give us some concern. And what we've been seeing is we've been seeing incessant selling. Now, if we get to, some of these are notes from the newsletter. If you don't get the newsletter, there's a free version in the link in the description. I would get it. It comes out 3 times a week, and it's packed full of information. And you can actually follow along what we do in the trading community. So you see this line, right? So this is the anchored VWAP from the low. It's the last thing you wanted to break. What we did today is very clear. We got to the 50 SMA and we rejected. Okay. We rejected here into the close. They gapped us up, right? And pulled, as I referred to it, the flim flam, and now encapsulated the bar. So now I have a bearish engulfing, and this long red nasty bar is not as bad as this one last Friday. But to me, this bar technically is much worse. Okay. Because this means we're still playing games where they're gapping us up so that people can sell stock. That's more of an issue for me than what happened on Friday. You could have taken Friday and said, okay, maybe we have to work our way back up this bar. But to me, this setup particularly, and this is coming from somebody that thought the lows are in, and I'm still kind of leaning that maybe they are, maybe there's going to be some kind of capitulation or flash here, but we're not seeing that yet. I'm going to show you that in a moment. But everything that's going on here, if this breaks, you're probably going to have a pretty quick sell down there where people are just going to say, I've had enough. Here are the cues. Okay, and you're going to see something very similar today with this. And again, this is something I was watching all day today, and it gave us a really clear signal. But here's your anchored VWAP. And so you can see where that level is, right? This is where you battled all day long. All day long, there was a battle in here for that on that line. Okay, and then you could see how it flips that line right there. And this is where the anchored VWAP is that we were just showing you on the daily. I can actually split the screen. You can kind of see this real time. So you can see right here where you're at. And then you can see how that played out here on a 1 minute chart and how you fought that line, that 365 right in here all day long. And when it finally cracked, that was it. That was the end of it. That began your descent. So I think that when you start to see this and you're unable to hold these kinds of levels, your antenna really needs to go up. And for me, that's definitely the case. Now, one of the more troubling things is that this VIX, which is the volatility index, you're unable to break here. You're unable to break this flag. You're unable to stay below 25. That's kind of a red flag. And that's definitely something that should be on everybody's radar. So I'm taking out lows on the indexes and the VIX is dropping. It's like the worst thing you want to see. It just means that people really are just selling stock and they're not really protecting their capital. And that can usually lead to more selling pressure. So based upon where you're at, you do not have any leading sectors that are holding in there. You don't have anything like that. You know, here's your hammer bar. That's what we were talking about. You had to hold and then maybe work off that. They gap you up and then they encapsulate that bar in just sheer selling and close you at the low of the week. There's nothing redeeming about that. And you know, this is a leading indicator. And this was the first indicator on Friday to actually break that low anchored VWAP. So by just watching this, you can kind of get a lead on what the Nasdaq's going to do. But I don't think if this sell-off continues that anything's going to be safe. The only one that looks remotely decent is energy. That is the only one that looks decent. And those stocks have been respecting the 21-day moving average pretty cleanly. If you take a look at that right here, right, you can just kind of see that, right? They've been holding on these levels, the XLE, bonk, all along in here. And you've seen even the big super majors are doing that too. Like they're holding on that 21-day over and over again, right? They're all riding that 21-day. So you definitely have a buyer in there on some of these kinds of names. And you know that would be the level that you might want to look at and seeing if you can get to there and then maybe taking advantage of that. And just maybe getting a quick trade on some of those energy names. But with the news coming out of the EU and how natural gas and LNG are interacting with one another, it makes it somewhat tumultuous right now in this kind of environment. So I hope this was helpful. If it was, please comment on the video and like it. Sharing it definitely helps me with the algorithm as well. But your comments on what you want to see, that's really what makes the difference for me. It allows me to figure out which way to go with all of this. So everybody, have a great weekend and trade to win.